Well, good morning. Welcome to the weekly market report from the Ag Market Network. The exports have just come out, and we're going to go straight to that and see the numbers. I will tell you, I peeked at the cotton, and it's a big number, 329,100 running bales. And here's the breakdown. Bangladesh took 120,400 running bales. Vietnam took 76,700. Turkey took 41,900. Mexico took 21,300. Malaysia took 16,900. China canceled 13,000 bales. New crop sales of 151,200, primarily for China. That's 117,300. Shipments of 274,000. Now, cotton before the report was up 30. Right now, it is up 56. We have cleared 60 cents. This is where resistance has been. For this market to technically be strong and take the next step toward moving higher, we need to stay above 60 and close above 60. We'll have more comments about cotton in just a minute. Let's take a look at soybeans. You actually had a negative number of 109,900 metric tons. The Netherlands took 127,000 metric tons. Pakistan took 71,400 metric tons. Japan took 62,900 metric tons. And then we had China canceled 422,700 metric tons. So China making a statement there, at least in soybeans. It appears they can do without soybeans, but they can't do without cotton, or at least this number seems to indicate that. The shortness we've heard about in cotton and the great needs for high quality cotton in China. Next, corn, 56,100 metric tons. That is a low number. That is 56% under the 4-week average. Japan took 107,000 metric tons. Mexico took 86,000 metric tons. New Zealand took 28,000 metric tons. And then we've got 151,300 metric ton cancellations. New crop sales of 307,600 metric tons for corn. The corn market before the report was up about 4. Right now it's up 3 3/4. Wheat, net sales of 462,200 metric tons, and that's 2% under the 4-week average, but that's a good number. Japan took 106,700 metric tons. South Korea took 106,200 metric tons. Sri Lanka took 75,000 metric tons. We did have cancellations of 126,500 metric tons to unknown destinations and a small number for new crop sales. Okay, let's talk about cotton. That's really what I want to talk about here. I've just made some notes here on the subject of cotton and why should we move up. And I'll go over these for you. Why should we rally? We are in a heavy oversold position, which means speculators currently have the largest short position in history in cotton. And typically, no matter what the market is, back through history, whether it's soybeans or gold or cotton, when you get a market so heavily full of speculators, whether it be long or short, in this case short, it has a tendency to bog down, and at some point the market will move back in the opposite direction. And so I think we're getting close to that point now if we're not at it as we speak. In addition to that, we think that we're seeing it here on the board. We think there's good mill buying down at these low levels. So that provides support for the market. Another reason that the speculators are vulnerable right now. And another issue here, number 3, is merchants need cotton. If they don't need it, they're going to need it. We are right now at probably one of the lowest levels in history of farmer selling that we've seen. And merchants are in the business of buying cotton from farmers. At these really low levels, they're not going to be able to buy it. And the general thought is somewhere towards 66 to 67 cents in that area, basis to December, is where farmers will start selling cotton. Right now we are at $59.95. So put that together with an extremely oversold market, mills starting to buy cotton. China seems to really need cotton. They put in a request to lift the tariffs at least temporarily. for a certain amount of cotton so they can come into the market and buy it, irregardless of what's going on with trade negotiations. We'll see if that plays out, but if it does, it will certainly be supportive even without a trade deal. Next thing, crop conditions. We're hearing south of Lubbock in the dryland cotton, that cotton is 31% open. That's very early, about 3 weeks early. We're also hearing some weather forecasts are changing toward more drier forecasts for that area. And with cotton south of Lubbock and dryland that far along, that spells problems for the yield in that area. Also, there's some forecasts for freeze as early as 3 weeks early, and that will affect a lot more than just that dryland. Next question, and this is one that's been talked about and kicked around for the last 13 months. Trade deal or no trade deal? I think we're getting to the point now where it's in the best interest of this administration to either come up with a deal, a partial deal, or some type of truce, because our economy appears, and the global economy appears, to be slipping into recession, and it will not go well for this administration if that happens, in many ways. But certainly, once you go into a worldwide recession, sometimes it's not a matter of just flipping a switch and everything goes back to normal. And so it is very important to do something with regard to a trade agreement. To let this thing continue to move forward is going to have even greater repercussions, not just for agriculture, but for the entire world economy. Something needs to be done. So when you put all that together, it seems this market is standing on the edge of what I believe will be some type of a rally, maybe more than people think, in cotton. So that's really all I've got to say for today. One last look at the markets. We're up about 29 in December cotton, so we have eased back off. We got to 60.18 in December cotton. With the export report right now, we are at 59.85. We have November soybeans up 2 1/4. They were up 4 before the report. Not a good report in exports for soybeans. Corn up 3. It was up 4. It's eased back some. And the wheat market was up a little bit, maybe 1/4 cent. Now it's down 1.5 pennies. So not doing well in the grain markets at the moment, although I think an extremely oversold market in corn will find support irregardless of these numbers. So have a good day. Thanks for joining us for this edition of the Ag Market Network Weekly Market Report.